We believe India's economy is on cusp of a growth. The reasons can be any and many. Our own efforts at infrastructure creation, PLI schemes, global need for a vendor chain, alternate to China. We believe we are on a growth, and let's look at how the growth is panned out. 2006, India was 14th ranked economy in the world. 2021, we are 7th. We all know how equity markets have participated in this growth. Let's not forget the basic rules of market. Markets appreciate growth and market respects valuations. So as long as Indian economy keeps on growing and the valuations are reasonable, we do expect markets to create wealth for all investors. So let's look at markets relative to the world, and especially world means US. US is a $25 trillion economy approx with a $50 trillion market cap. India is $3 trillion of GDP and $3 trillion of market cap. In a big picture, US is large cap, India is small cap, and let's look at how these two have behaved over last 30 years from 1992, which perhaps the time India first liberalized economy for itself. First decade went to US leading the market wealth creation. The next decade was India. 2010 to 20 again it was US leading the show, and from whatever is available in the current decade of last 2 years odd period, it's India leading the show. To our mind, the key reasons have been 2000-2010 India formed a new growth engine, that was IT service exports. We got money from abroad by exporting our services. We believe in 2020 decades the same story is likely to play out in addition to service exports through manufacturing exports. PLI being the reason for this, production link incentives. Government of India is consciously targeted industries to reduce import dependency or increase the export promotion from India. Either of the two cases, which is plus on exports or minus on imports, may create GDP growth, and which will create virtuous cycle for Indian factors of production like land, labor to be employed. They will generate income for themselves, and moment they generate income, they will spend on something else. Let's not forget the key variable in economy, one man's expense is other man's income. So as each of these people spend, somebody else will earn, and the virtual economy growth gets created as a virtuous cycle. There is another virtual growth happening in India. On one hand, as a government which is pioneering efforts towards digital India and a formal India, which helps them to create more revenue stream, increase tax compliance, gets them more income. The other end of the spectrum really is a corporate India, where government is investing that revenue generation through a PLI structure where corporates get some incentive. Corporates are doing their job, they're creating new capex, they're going to create new business models for themselves, employ people, and that employed people will in turn create a cycle where government keeps on getting more revenue. So it's a nice cycle to be happy about on virtuous growth. Here we believe in this entire growth cycle. We need to participate in equity markets, and that participation can be through multiple routes: large cap, mid cap, small cap. So let's look at how each of these variables in large cap, mid cap, small caps behave over time. Studies shows that market leadership keeps on changing across years, and one of the reasons why the leadership changes very fast is the valuations go out of respect, in the sense that sometimes valuations run far ahead of expectations, and moment that happens, there's a time for leadership change. The leadership change happens to the next sector. We believe today at the juncture which we are, it's a time for small cap as a category to take up an investment leadership, essentially coming out of underperformance maybe of last 12 month odd period. It is obviously a longer term investment theme to participate in the economy. Other variables relevant which we considered right now as the right time is one is the entire monetary cycle. Small cap companies typically are bigger consumer of capital, so for them capital availability can be a challenge. We believe we are more or less at the fag end of the monetary tightening cycle, not only in India but even in US. To an extent, some of these comments are driven by official policy statements introduced by those regulators. and to an extent it's also the market expectations, where we generally get a sense that moment this rate tightening cycle is towards the end, it will be a good time where some of these small cap companies start benefiting on their economic business model, where their interest costs can start coming down going ahead. That's the idea where we believe it's a time to invest. Coming from a pure market perspective, independent of large, mid and small, and let's look at sectors. Indian economy has been stabilizing post-COVID for last maybe 24 months odd period. As we see, leadership keeps on changing almost every quarter. We do believe this is in a way a healthy sign of a normalizing economy. At the same time, it's a normal behavior in an economy which is growing, because when economy grows at a nominal of 10, 12, 15% GDP, each sector gets benefits, because as I mentioned, one sector's expenses, the other sector's income, and to an extent the leadership changes pretty fast. For every company, there is a need to evaluate them on these 4 parameters of growth, cash flow, management and valuations. We are all here investing for growth, so never forget growth. Growth can come from any color. It can be pricing power, can be volume growth, can be through margin expansion because of cost controls. Cash flow is equally relevant, because the biggest part of cash flow really is that it allows the companies to grow on their own. All of us like independent companies where they don't want to come to market dependency for money raising. So as long as you are able to handle this well, the self fulfilling growth is an amazing achievement for a company, which creates its own market appreciation and wealth creation. Management quality, needless to speak, but yeah, that's the most vital in any of these companies. To an extent, a small cap company actually is a play on Indian entrepreneurship. We've seen many Indian companies growing because of the leadership being shown by the owner, actively demonstrating in the business acumen and the attitude there. So idea is very simple. We look at growth, cash flow, management as 3 key variables, and then identify the 4th, which is called valuation. Where does the company figure in terms of valuation based on the other 3 parameters? If the valuation permits us to identify a right price point, which is actually a gap between the current price and our own target price, then all we need is some sort of a behavior, some sort of a catalyst to happen in the economy, from either it's a policy making, it's a corporate action by the company, or a sheer earning growth coming from demand, which can create that catalyst for the faster growth. And that makes us as a eligible or evaluate those companies on those parameters, that is this the right time to invest in some of these companies. Coming to valuations, which is where we, as I said, we look at companies. So let's look at the broad valuation of small cap as a space. We believe small cap companies are reasonably valued vis-a-vis what they were a year ago, and to an extent perhaps it's a good entry point on a macro basis. On a micro basis, clearly our own framework of investment identifying companies is likely to help in generating those ideas which can create wealth for our investors. To close this entire conversation about small cap, let me highlight one key feature of any small cap company. A small cap company is either a relevant customer to a large cap company or a relevant vendor to a large cap company, because that ecosystem is naturally inbuilt. Every large cap company needs a small cap company to either consume their products or to get their own supply chain manufactured from those small cap companies. So when the growth happens across industries, across sectors, it's going to percolate to large, mid and small. Some small cap companies we would like to participate to play the volume growth story, where absolute profits will grow because of volume. Some small cap companies we would like to participate for margin expansion story, where these companies will basically gain market share and be able to price their products right, and in turn create wealth for themselves and for investors. That's mainly on the small cap fund which we are launching. Look forward to your participation in the fund. So we welcome you all on this journey of happy investing with Mahindra Manulife Mutual Fund. Thank you everyone.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.